Pay me, pay me, pay me my silver now. Pay me or go to jail. Pay me my silver now.
Good morning, Bix Weir, roadrunner.com with your morning horn disease, your sip of chaga coffee. That's gone. Lots going on, obviously. We're in the wait-and-see mode. You should be on the sidelines, not participating in anything you don't have to participate in. Don't play the trading game. Don't look at the prices, all that stuff. I don't know how this game will end. For silver, there's two choices. You either slam it down and shut down the markets, or you allow it to go through the ceiling and destroy the markets on a level that people couldn't even comprehend, because of the derivative backup of all these contracts it takes to rig the markets. I would like to point out, great discussion here at Liberty and Finance with Dunnigan and Edward and Vieira, who's a really smart old gold bug. And he was talking about, all the gold bugs are saying, oh my God, it's happening. The BRICS are going to a gold standard. But Edwin Vieira kind of throws water on it and says, hey, it's impossible. It can't happen. A true gold standard can't happen until the old system is destroyed. He doesn't really get into that, but with what I was reading today, and I'll show you a chart, it's 3 quadrillion, 2.5 quadrillion derivatives with this massive bubble of derivatives over and above everything you can even imagine. The amount of fiat currency, you name it. It's so much bigger than everything else. So I do believe that the BRICS nations are doing the right thing. They have to get something in place so that trade continues between those countries after the banks crash. But it can only happen after the banks crash. No country on the planet would destroy this fiat money system unless they weren't winning. And who's not winning right now? It's the United States of America. The largest debtor nation in the world will win if the debt is gone. And we control all the cards because we invented the computer programs that run all markets these days. So, yeah, of course we can destroy the Russian economy with a click of a mouse, the Chinese economy with a click of a mouse. We can destroy the yuan with a click of a mouse. And because they're trading derivatives, they're not trading in anything even resembling the real thing. So keep that in mind. But yeah, listen to this old gold bug say, hey, the reality of a BRICS gold-backed currency running while the old system is running is impossible. It can't happen, and it won't happen. But I can understand how all these countries want to get something in place. The United States has planned to go back to a gold standard since we went off the gold standard, since the Fed was created. And I've showed lots of evidence of that coming out of the Fed Boston. All of this documentation says, yeah, we're trying to destroy the system. It's just we're going to run the system as long and hard as we can, soaking up all the benefits. Now, some of those benefits were creating this huge strategic petroleum reserve that Biden has just cut in half. So, whether or not why the good guys allowed this, I don't know. A lot of this stuff behind the scenes is allowed to happen, maybe to show how stupid the politicians are. I don't know. Anyway, let's get to silver. Silver's the most exciting thing, although it may not look like it. They allow it to go up. They allow it to go down. They allow it to go sideways. As far as the price, and this is the COMEX price, the futures and options price. What are they doing right now? They are trying to push it down. You want to know where they're trying to push it down to? I will tell you. Pull up the 1-year chart and look at the moving averages. Here we are. There are the moving averages. The 50-day moving average is at 23.54. 100-day moving average 23.70. And the 200-day moving average is at 22.89. So they're trying to push it below these averages to get the tech traders to sell, to go short, actually. Sell their longs and go short. That's been the game for so long, but the bad guys have been losing over the past few years, and that's why J.P. Morgan got out of it stealthily. And what they did was short the COMEX and then take delivery of physical silver. The exact same thing is going on, but I don't think it's J.P. Morgan. Somebody else is doing the exact same thing right now, and you can tell from the COMEX data. This open interest keeps rising and rising, but what is making it fall is, well, number one, the deliveries yesterday that JP Morgan or Bank of America needed a hell of a lot of silver. That's right here, the 764. But the key is, here it is again. Today, again, another exchange for physical. This one's 4.2 million ounces of COMEX contracts bought in the U.S. and then transferred over to a futures cash contract in LBMA for delivery of physical metal. So that's what's going on. Harvey Organ, again, keeps a close eye on it. He's 1 day delayed every time. So add that. So we're now at 70 million ounces delivered in July so far. There's still like, a week and a half left in July. This will get well over, I think it'll get over 100 million ounces, maybe 150. It might even hit the 200 ounce delivery that is the world's record for this criminal game that they're playing. So just keep an eye on it. It has nothing to do with price. Physical silver has nothing to do with price. Keep that in mind. Premiums are pretty reasonable. You can go out and buy as much physical silver as you want right now, supposedly. Now's when the millionaires and billionaires get in, or maybe they'll wait until the riggers push it below 22.98, so $23 to get that little bump at the very bottom. I don't know, and I don't care. I'm on the sidelines, and the only way to deal with this and keep your sanity is to be on the sidelines. Get your metal, get your cryptos, and get on the sidelines. Again, 850 exchange for physicals. This EFR is 800. Now, an EFR is an exchange for risk, is a privately negotiated simultaneous exchange of an exchange futures position, that's a long position, for a corresponding OTC swap or other OTC instrument. Who's big in the OTC market? That would be Bank of America, JP Morgan, and Citibank. So it's one of those three that's playing this game on that EFR derivative game. And then there's also a TAS, which is a trade at settlement, is an order type that specifies the day's settlement price as the order price. That's not a big deal. So that's where we are. Open interest keeps rising. Ted Butler's looking at this Friday report, and if it is, it should be shocking to the market. If it is reported cleanly and they don't rig the numbers, this is the U.S. government, so they'll probably rig the numbers. It should show who had to short over 100 million ounces in the last 3 days of last week. Not specifically the bank, but it'll tell you if it's a commercial short or if it's some other short. What do I think it is? I think it's a combination of, open interest went up, so it's going to be very revealing. It's probably the commercials going short, which is completely, they've been trying to get out, and now apparently they can't, because somebody's at the other end of this buying these contracts and then taking delivery in London. So we will see. It's getting really tight. Boom. Here's a really cool chart of the derivatives and unfunded liabilities of the world. And they're claiming I've been saying 2.5 quadrillion for the derivatives, which is about right, and then unfunded liabilities 3 quadrillion. So there you have it. They're comparing it to the central bank gold, which is only 2 trillion, but it's 3 quadrillion in derivatives and liabilities. Liabilities are derivatives also. Everything's a derivative. It's not a standalone asset. It's a derivative of a standalone asset, in my opinion. So, yeah, that's how big this thing is. So, obviously, if the derivative market goes sideways, and it's just a handful of people who control, 99% right here. If you look at at least in the U.S. banking center, JP Morgan, Goldman Sachs, Citibank, and Bank of America own 89.5% of all the derivatives of all the commercial banks, savings associations, and trust companies in the United States. So it's just the riggers, and they collude together to rig prices up, down, and sideways with the Fed. So that's, if you want to know just how crazy it is, JP Morgan being the number one. Now, JP Morgan has been charged and found guilty. I think it's 4 felony counts with over 80 major cases and 40 billion ounces in dollars in fines paid in the last 20 years. J.P. Morgan Chase has $3.2 trillion in assets, the largest bank I think in the world right now. But they are also the largest single entity of derivative holdings. So if Jamie Dimon and his band of merry pedo cronies goes down, that's the end of all these banks. That's the end of your bank. I don't care where you're banking. It's the end of your stock market, your bond market. That's the end of the game. $3 quadrillion in derivatives comes crashing down. Now, how can we tell if J.P. Morgan is getting attacked by the good guys? Just keep an eye open for this stuff. J.P. Morgan listed a Lolita closet on the New York Stock Exchange for Jeffrey Epstein's main money man, Les Wexner. J.P. Morgan and Jamie Dimon are knee deep in the pedo rings in the Jeffrey Epstein story for decades. This is absolutely, and Lolita's closet was, there is a women's wear called Limited, and they were spinning off something for little girls called Limited 2, which, I mean, you look at what they're selling and it's like, oh my God, imagine Victoria's Secret for children type of stuff. And yes, of course, it was the management of J.P. Morgan. I don't know if Jamie Dimon was the head back then, but this was back in, the spinoff happened in 2007. So yeah, Jamie Dimon was the guy. Let me look and see when that happened here. And by the way, the Lolita Express, Epstein's plane, was given to him by the owner of the Limited, and a guy named Les Wexner. Hope you guys know all this already, but it's shocking to understand that the world's largest derivative holder in the world, number one by far, is J.P. Morgan, is knee deep in the Jeffrey Epstein horrific operation. And Jamie Dimon was the head of that horrific financing operation of this global pedo ring. They can't, all this is coming out now in court. So I keep a close eye on it because I want to know when silver manipulation is going to end. And from everything I've looked at, read, analyzed, and talked, for example, Jenny Moonstone, she's always been saying when the pedo ring goes down, silver will finally be cut free. And now it makes more sense why she said that, given that J.P. Morgan is still the number one silver rigger on the planet, taken over from Bear Stearns back in the day. So yeah, if J.P. Morgan goes down, kiss it all goodbye. Mainly because of the counterparties. You can't strategically remove J.P. Morgan with, $60 trillion in derivatives. It can't be done. And as a matter of fact, it was not meant to be done. Just last quarter, the reported quarter, which would be the first quarter of 2023, J.P. Morgan jumped, I think it's about 10 trillion higher in derivatives in one quarter. I mean, where are the regulators? The OCC guy, I forgot his name. I've talked about him quite a few times. He came from J.P. Morgan. He's the guy who regulates for the Office of Comptroller of Currency. And then you have Rustin Benham at the CFTC. It's supposed to be doing something, but apparently they're not doing anything except, and there's a J.P. Morgan, ex-J.P. Morgan woman on the CFTC board. So yeah, this is all, it's all going to happen together. That's why you have to be on the sidelines, completely removed from the melee. The melee is happening now. It's behind the scenes. The Fed's bailing out everyone behind the scenes, but it's not going to happen for much longer. As we get into August, we get the FDIC report that we have mid-tier banks crashing. People are going to start running to their bank. We know the banks are in deep trouble, more trouble than they were in the first quarter, which was crazy, right? As a matter of fact, the banks are stopping most of their credit, allowing people to increase their credit cards. Or here's a story. New York Fed reports surge in credit application rejections. So this is what happened. All of a sudden, the banks are saying, oh, no, we can't give out credit cards. They were giving out credit cards. They're not even giving them out at 29% or whatever the ridiculous interest rate they charge now. So that is exploding higher. It is right at the area of 2008 before the crash, 2007 before the crash, and then everything went haywire. So I do expect to see massive banking problems in the very near future, and then massive banking problems, whether it's J.P. Morgan failing on the derivatives side going downstream, or you get a bunch of crazy derivative traders in Asia, being shut down and not having to live up to the counterparty risk that J.P. Morgan is. That would be an upflow of the drama. The drama's coming, and the drama is going to be very, 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 very interesting. Keep an eye on this. $3 quadrillion in derivatives. That was always the end game. That's why they didn't regulate. Greenspan was adamant in the late 90s. No regulation of derivatives. We have to give the banks the power to destroy themselves. And that's what happened. So that's where we are on the road to Ruta. Banks have the power to destroy themselves. JP Morgan's doing the best they can to hold things together with scotch tape on the COMEX. The CFTC is in on the game. The U.S. Mint is in on the game. Ventures Gibson should be investigated. And whoever put Ventures Gibson as the head of Mint, Ventures Gibson has no reason to be at the head of the Mint. Nothing. No Mint experience in her 40 years of government experience, 30 years of government experience. None. Nothing related to coinage, any of that. David Ryder did. The guy before Ventures Gibson, absolutely. He was doing 4 or 5 million coins per month as it kept up with demand. What happened when Ventures Gibson came in? They filled the world with bullshit, and they wanted to stop the program altogether. You guys want to know more about that, go to roadtoruta.com and listen to the interviews. Go to the first page at roadtoruta.com. I put up the banks that'll probably be destroyed by this quarter's FDIC announcements. There's a whole list of them. Go check that out at roadtoruta.com. But listen to the three videos or the YouTube posts of my conversation with the head of Silver Eagle sales at the U.S. Mint, and he basically tells me everything that I thought was going on and affirms it, that the U.S. Mint is purposefully not making coins to meet demand because there's so little silver out there, and oh, by the way, they're charging way too much for them. They are messing around with the derivative book, lost $112 million in derivatives when the price of silver went down, which is the only reason for them to place a derivative, is if the price goes down, they're supposed to make money on the derivatives. What happened is they didn't close out the derivatives because that would have added buying pressure to the COMEX, and they said, no, we're just going to use $112 million and rig the price the best we can, and that's what happened. And it's all there in the annual report. Go check out those discussions. Also, if you are looking to join the private road at Road to Ruta, we are currently giving away, at least right now, until silver breaks through 30, the silver Ruta coin. Really cool coin, hand-painted, double-struck, numbered, certificate of authenticity, the whole schmeal. And we give those away with a 1-year subscription to the private road at roadtoruta.com. And I will be posting a private road discussion tomorrow for all the private road members where we're going to get deep into the weeds. You guys will like it. That's all I got for you. This is Bix Weir. I'll talk to you later.